Welcome to Access a Trader, the #1 community for high-level traders to learn valuable trends and strategies, connect with other top traders, and become consistently profitable. Click the link in the description of this video to receive a special offer on our revolutionary PS60 training, access to our daily chat room filled with experienced traders, and so much more. Space is limited, so make sure you don't miss out. We look forward to seeing you in the room.
Hey guys, good morning everybody. Welcome to another edition of the AccessATrader.com weekend update show. Hope everybody is doing great. For all you guys who are once again joining us via social media platforms, StockTwits and YouTube, and all of our friends that follow us weekly on Twitter, welcome aboard. And I want to start out this way. I mean, if you're watching this right now, okay, if you're watching this right now, you are so blessed, okay? You are so blessed. That means you're healthy, okay? You're healthy. You're alive, okay? You're alive. Everything else in our lives, okay, we can't control. We know we can't control. There's nothing we can do. One day, God forbid, we're all gonna not wake up, okay? And that's a bad day. Everything else, guys, is a cherry on top. The fact that, again, we're watching this, we're here together, we're blessed. What else can you possibly want out of life than just to be alive? Everything else you make out of life is, is what you desire to do. So I see a lot of people, really moaning and griping and, just really upset about so many things they can't control, and it really absorbs their lives, okay? The most important thing, look, if you don't like the government, vote the other way. If you don't like your healthcare provider, switch healthcare. Do whatever you can control. The one thing that we can't control, that we can control actually, is our happiness. And if you let outside influences completely absorb your life, okay, you're not going to be happy. And living a life that is without joy, what's the point? So if you're watching this right now, you're blessed. God is great, okay? God is great. God is going to help you through everything you have in life. Sometimes it's not going to be obvious, right? Sometimes it's not going to be obvious. But if you have faith in God, if you have faith in yourself, good things are going to happen. So, don't let the little stuff, kind of bother you or upset you or consume you. Just live your life, put a smile on your face, and God bless everybody. So let's get into the markets, right? Let's get into the markets. Flat week across on the indexes. Is that bad? Is that good? I think it's fine. Okay, I think that's fine. For 6 months, 7 months now, we've been hearing about the China trade war, and now again, people are just traders and people and investors. We're really becoming numb to it. Again, it's like that marriage that people are married 30 years, right? That they're married 30 years. They know everything about each other. They sit across sometimes from the dinner table. They don't even say a word, right? They don't even say. They're kind of numb. And that's where these headlines are. That's where these kind of macro headlines on the China trade war. Yeah, you can get this crazy headline one day and the market will sell off 200 points, and the next 2 days they'll make it back. Because again, we are learning, right? We're learning to live with macro news. And again, I go back to this example all the time. After 9/11, it was the most scariest part of living in anywhere, right? The threat of terrorism was imminent everywhere. So after a while, people just started becoming numb to it. And again, it was just part of our lives. So the structural balance of these China trade wars news, it's out there for us. It's out there for us. And in the last 6-7 months, you've seen these headlines back and forth, but yet we're still in throws away from all-time highs, right? So you kind of start being numb to it. Trading is exactly the same way. If you're an aspiring professional trader, you're almost in a weird way because, again, and I say this all the time, the quote-unquote trader, the professional trader, okay, not the old guys who are going back into the 80s and 70s. I'm talking about the mainstream. You could sit behind your computer, click the mouse, right? Click the mouse and try to make a living, okay? This is relatively new. This is like 25, 26 years in, okay? We're all trying to figure out the next edge. Don't tell me that somebody has figured everything out and it's their way or the highway. It's all trial and error, okay? Even though I'm incredibly comfortable trading my pivots and it's like putting on a pair of socks for me, that's how normal it is. I'm still fighting demons, just like every other trader. I'm still fighting demons. I'm still putting myself in a situation that I'm vulnerable, but we're working through it. That's the whole point of it. We're working through it as traders. And if you're an aspiring professional trader and you don't have a valid process, okay, or something that is at least resembling a valid process that you could at least make money on a consistent basis, in a weird way, you're almost getting numb to it, okay? You're almost getting numb to it, and you would rather continue to eat the crap, okay, of something that is not performing for you, or at least the way it should be performing, than trying to something new. And I tweeted this out. A few days ago, and when I first started trading a generic at the end of 90, let's just call it 99. I started out trading drillers. Okay, the person that I was sitting next to was supposed to be my mentor at the time. Lasted for like a month, but anyway. I started trading drillers, okay? And then from drillers, I started trading brokers, right? The Donaldson, Lufkin, Generette. A lot of you guys watch and say, wait, what? What the hell is DLJ? Merrill Lynch, DLJ, stuff like that. Lehman Brothers, that's right, I said it. But I went from drillers to brokers, and then that obviously opened up a huge door into the whole .com era, which was good, obviously. And then it kind of shifted away from the .com era because, again, after a while, you couldn't make money on it when they crashed. And I started swinging small cap stocks, of all things. And I did that for a number of years, a really, really long time. And then when that edge died, and especially social media became such a great part of that group, there was no edge left for me. There was literally no edge for me. So I went from that, and I found beta. So the moral of the story is, if you're an aspiring trader, you can't just shut your eyes and put the visors on a number of so many things. You have to try everything before you figure out where your true comfort zone is. You really need to try everything. If you've never tried options, try options. Is options my thing? No, I've never really traded options. Of course, I put on option trades, but I don't know anything about options. Buy calls, buy puts. Okay, I heard these things about selling premium. Okay, I get the concept, right? Condors and butterflies and spiders and bears. Okay, right? I don't know anything about options, but at least I tried it. Okay, have I ever tried futures? No, I haven't ever tried futures, but at least I have the concept. Options, spiders, ETFs, high beta, small caps, whatever your case may be, even crypto, whatever the case may be, try everything out. Feel what's right for you. And after you put on all these different hats, then you can make a rational decision of what is feeling right for your lifestyle, account size, pain threshold, and just your overall long-term objectives of where you want to be, okay? Is beta right for everybody? No, it's not right for everybody. If you have a $2,000 account, how would you possibly expect to trade Amazon with me? Think about it. It doesn't make sense. So something has to be right for you, and there's no such thing as right and wrong. The only best case scenario of right and wrong is profitability, and if you can make that trading baseball cards of all cases, use that. Get your advantage, seize your edge, and embrace it and just run with it. And that's the whole thing. Trading is all about trial and error, and the most important part is seize your comfortability and run with it. And again, you will probably achieve your long-term goals if you don't get sidetracked. And there's a lot of things, unfortunately, in this social media environment that can sidetrack you. So let's get into the markets really, really quick. I know I kind of derailed a little bit. Flat week for the markets. Does it really make a difference? No, it doesn't make a difference. Again, the China headlines off to the side doesn't make a difference. Again, macro, it does. Trading aspect, it doesn't make a difference because, again, we keep on embracing it. We keep on absorbing it. We are now knee-deep into earnings season. What does that mean? That means your favorite stocks, your favorite companies that you shop with, your Apples, your Amazons, your Netflixes, and all that good stuff in between. They're going to come out with earnings. Netflix was the first one to come out with earnings last week. You saw the really expanded range on these things. Netflix gapped down like 50, 55 points and then rallied back like 30, or rallied back like 40, whatever it was. And then the next 2 days gave really good opportunities on the short side. We'll talk about that in a few minutes. But what's great about this earnings season, especially if you do trade beta names, expanded ranges. You have a big week coming up. Last week you had Netflix, you had Microsoft, the two biggies. This week you got it all, right? You got it all. You got Google, you got Amazon, you got Facebook, you got Twitter. I think Twitter's on Friday. You have a lot of big names, so that's going to give a lot of really good opportunities, especially if you trade ranges. And again, for me, the bigger the ranges, the bigger possibilities of a pivot that is going to confirm either up or down. Again, I trade with zero bias. Matter of fact, Friday, we had trades in the room within one candle of each other. Netflix long and then Netflix short. This is within one candle of each other. This is why I trade beta. This is my comfort zone. This is like my 8-year-old. This is like when an 8-year-old has their favorite toy, their favorite blanket. This is my comfort zone. Is it yours? Again, we don't know until you try it. But again, I found a very definitive arbitrage within these charts, and I found them by accident. Okay, I found them by accident. But the most important part is I did find them, and I back tested them, and we've been trading them pretty well for the last 5 years. So look, going into this week, you have to give the bulls the benefit of the doubt. Okay, you have to give the bulls the benefit of the doubt, because right now, is there a really reason, unless some new macro news comes out, is there a new reason to sell stocks? Number one, everybody's on vacation. Okay, number one, everybody's on vacation. They will continue to be randomly on vacation until after Labor Day, until kids go to school, right? That's the bottom line. Okay, so I've been taking a whole bunch of vacations in the last 2-3 months. Went to Disney, went to Hershey. Last week in August, I will be in the Hamptons, and then that's it. And then everybody else comes back to, comes back to work full steam. So there's really no reason, okay, unless we get some sort of macro news that's going to really shatter the market, that we should tank. Okay, pull back, yes. Back test, yes. Tank, fear. There's nobody really around to take advantage of the tanking and the fear. Again, there's no aggressive juice to the upside, but there's no fear and there's no reason to sell stock as well. So you're going to have a reality that the stock market will kind of be flattish to upward bias, flattish to upward bias, flattish to upward bias, and that's okay. Again, no news is good news. And again, as I say all the time, the idea that the stock market is here is false. Okay, the stock market died a long time ago. Now is just a universe of individual stocks that you have to trade based on your own individual process. And that's what we do. That's what we do. Again, understanding which way the wind is blowing is important. Having an opinion is important. Having a bias is important. But again, it's all up to you and your individual process to kind of make sure that you are leading with your shield and not with your chin. And when the moon and the stars and everything aligns, you have to strike down with a tremendous prejudice to make sure that you're taking full advantage of your specific sweet spot. So pretty solid week. It started out pretty aggressive. The first 3 days of the week. Then you kind of started seeing volume just kind of taper off. And that's not uncommon. We are, again, still in the market summer trading. The only difference is this year, and I kind of started noticing it last year as well, but what we're seeing this year is just really good opportunities this whole summer, especially in a weird way, especially on Fridays. And again, does that have anything to do with the strength of the market, that people are taking much more aggressive bets, especially in the option weeklies market? Does that have something to do with it? Maybe it does, maybe it doesn't, but the overall environment has been really, really good. So if you still believe that summer trading is dead, you're not really trading. You're not really paying attention to the market. There's some really good, phenomenal opportunities. Now, again, I don't know if they're around for the mid-cap market, if they're around for the small-cap market. Again, yes, you're going to see one or two crazy little stocks go up 900% for the day. But I don't know. I don't follow that market close enough to see if there's actually great value day in, day out. But the fact that some of these stocks do trade $300 a share, $500 a share, $800 a share, $1,200 a share, $1,800 a share, they're going to give you some days that are very, very big expanded channels. Well, because they're $1,800 stocks, $500 stocks, $600 stocks. And the greatest thing about beta is there is no bias. You can trade them long, you can trade them short. And the most important part is, long as these channels confirm on the 60-minute via supply or demand, depending on which way you're trading, you could get valid setup. So Friday's session, Friday's session wasn't bad at all. It was solid. There was nothing wrong with it. I put on I think 4 trades. I think I put on 4 trades. I made money 3 out of 4 of them. The only one I lost one was my first short on IQ, which I had a profit in. I guess I could have used break even on that profit, but I didn't. So I wound up losing 15, 20 cents. Not a big deal. I actually made it back and then some on IQ on the second trade. Traded Tesla, traded Netflix. There were several trades on Netflix as well. They were pretty solid. And that's it. I mean, just again, not every single day needs to be this massive $9 candle. It's nice, we want it, but again, even the greatest baseball sluggers, even Mike Trout can't go up on to the plate and try to hit a home run. It's impossible. Okay, it's absolutely impossible. So home runs in trading, they come organically. A lot of times they just come overnight. If you're selectively positioned in that right way, and you get some sort of news, individual news in the company, or you get some really good relief when the futures market and that directional bias that you're in, you could get a home run trade. If you're trading in the intraday cycles, you can't plan on a home run. Again, you can't plan on hitting it out the park. You take what the market gives you. And the one thing I've always said about these pivots, they could go up 40 cents or they could go up $40. Obviously 40 is a little bit of a stretch, but you kind of get my drift. I've had trades this week in Tesla that I made 40 cents, right? I have trades that I made 30, 40 cents on Netflix this week. And there's trades I made $3, $4 on Netflix, $3, $4 in Tesla. So like for example, on Thursday, right? Thursday, my first trade on Tesla, I think was like 38 cents. It wouldn't confirm. And I gave it all the time in the world. And I used, I just took a small profit. And then later in the day, it went from 320 to 323 in 3 minutes, right? Caught that. So most important part, guys, when you're structurally trading any single process, and I don't care what it is, again, don't plan on the big hits, right? Don't plan on the big home runs. Again, always trade with risk adverse. Your plan is always protect capital first, and then alpha hunt to the second, and then you'll be surprised. Again, you'd be surprised how fast things add up, even with the smaller wins, 30, 40, 50, 60 cents. Whatever the case may be. So let's get into the Friday session. So yes, let's start off with the first trade of my day. Look, I like this IQ chart. I like the IQ chart. First of all, kind of the background of this chart. Stock closed below the 10-day moving average. And again, I am in full belief that the 10-day moving average also is very, very important. It is the birth of the trade for me to the upside when a stock confirms. So for example, here, stock confirmed the 10-day moving average to the upside and started a whole new trend up. And I kind of called this the birth of the trade. So it's kind of the opposite to the downside. So this was the first close on Thursday that IQ closed below the 10 days. So for me, it was a sell signal. So I shorted my first short on, and the reason why I say my first short on IQ is right here. Okay, my first short on IQ is right here. And it broke the bottom channel. You can see the room it had down. So it broke the bottom channel. The only problem is it only went down like 20, 25 cents. I was giving it enough time to crack. And then the future started rising. And again, look, could I have used break even as my stop? I guess I could have, right? I guess I could have. I've been doing, knock on wood, I've been doing pretty well. So I kind of let things these days play out a little bit longer. So yada, yada, yada. I wound up taking, you can see here how it snapped right back. I wound up taking like a 15, 20 cent loss on it. Not the end of the world. I did reshort it back, okay? And this is kind of where I put this in our live Twitter feed. And I think, where was it? Right here. Let me just show it was right here. Yeah, so I put in the live Twitter feed and I said, hey guys, look at IQ, it's getting weak again. I don't think I put this first pivot in the Twitter feed. If I did, I just don't remember. IQ weak again, 32.20, 32 build now is a valid for a flush. So I re-entered the trade. I re-entered the trade right over here, and it went down about 60 cents or so. I recouped my first trade, made some money on top of that, and it just held. It just held. You can see how perfectly it stopped. It broke below that 32.20, and this was the 32.20, the first previous low, and it stopped perfectly on demand. Again, the whole theory of these pivots are stocks trade from supply to supply and demand to demand. So for example, here, it got rejected because it got rejected in supply. Here, right, it held demand because, well, it held demand. Stock held demand. So, again, I made back some money on it. That was fine. It is what it is. But the first trade, the first pivot that really did pretty well, and we had two pivots here on Netflix. I caught it both long and short. So 369. This is roughly around when the market first 20 minutes of the day. Netflix 369 needs to confirm for more upside. And the reason why 369, right? The reason why 369, that's the first opening candle, right? The first opening candle here, it broke above the supply. The first opening candle, once it confirmed, it put up like a $1.50 run, $1.51, which was good, which was absolutely nothing wrong. Went from that 369 all the way to 70 and a half, and then it reversed. And the one thing that we always say, again, I kind of reiterated this a few minutes ago, there is no guarantee that the stock will hit supply. That's why we always say, especially in the live webinar, always take money along the way. Pay yourself. There's no guarantees. There's absolutely no guarantees, and yada, 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 after everything was said and done. And, you know, on that first $1.50 move from nut to bolt, I only made about 88 cents on the trade. So there wasn't anything big, right? There wasn't anything big on the trade. It was fine, right? It was fine. Again, money is money. But there wasn't anything outrageous on it. And then things got really pretty constructive throughout the day, and you'll see what I'm talking about here. So here's the first bias to the upside, and then we started getting into, we talked about IQ, and then we started talking about 363 line, right? This is the same stock, and this is, again, why we trade beta. This is the same stock, right? Same stock. We have no bias. We trade ranges. They confirm to the upside, we go long. They confirm to the downside, we go short. So you had Netflix again. 363 is the line in the sand, right? It's a very definitive line. It's not 363.37. It's not 363.59. It's 363. If it builds strong below, it can flush. And again, here's Netflix, right? And why was 363, right? Look at the bottom of the channel, guys, right? Look at the low here, right? Look at the low from the previous day. The previous day low that held the lower demand is 363, right? So look at this. 363 is the low here. 363 is the low here. So look what happens, right? It breaks 363, right? It breaks 363, trades down to 360. So again, there is no bias. It confirms the channels to the upside, you go higher. It confirms the channels to the downside, it goes lower. Congratulations to all you guys who caught that as well. And then Tesla. I mean, again, how do you hate the stock? I don't care what Elon Musk does. This guy could blow himself up. This is still the best stock. I don't care what anybody says. You cannot convince me this is not the best trading stock ever, ever. First, for many years, Taser, if you guys remember the old Taser, around 2003, 2004, and this other company called Dynamic Materials, and it's still around. It's actually called Boom. The call letters are Boom. They were the two. I thought that it was impossible to have two better trading stocks than Taser than Boom. For all you guys who remember back in 2003, 2004. But this Tesla is like Taser on steroids. Okay, this is like Barry Bonds. This is literally Barry Bonds with the biggest head ever. Talking about I never juiced. So Tesla again, you know, just broke 314 channel, guys. Check this out. Just broke the 314 channel. If confirms below the 313.40 level can flush, right? So here's Taser. Again, there is no bias. I don't care which way this thing goes. God bless. I want the company to succeed. I'm all for innovation. I'm all for inventions and creativity and the whole global macro. So I cheer for Elon. Elon, but I don't give up. This thing confirms to the downside. This thing is going to confirm to the downside. So again, here's the channel, right? You had 314, which we talked about. It broke the 314 pivot, and I said, hey, if this thing confirms the 1350 level, the 1340 level right here, which is right here, the low of this candle, it's going to flush and went from 1340 all the way down to 1170. Again, we don't care. Capital raise, yes, we all know they need to raise money, blah, blah, blah. It doesn't make a difference. I don't care if the next model, whatever it's called, comes out with 3 wheels and no steering wheel. It's not going to affect the stock. This is a phenomenal trading vehicle, and that's all we care about. Upside, downside, as long as it confirms, that's the way we want the wind to blow. So Tesla, congratulations for you guys who caught that as well. I don't know if there was anything else. There wasn't that much. It was only like 3 or 4 pivots on Friday. It was a little bit more slowly. And again, for all you guys who trade small caps, I trade them very, very selectively, right? I trade them very, very selectively. But I do put them into a live webinar because I know there are people who actually trade these things. This AMPE was actually pretty good. Congratulations for you guys who caught this AMPE trade. Again, pretty basic, pretty basic chart. Again, you don't need to be the greatest, the greatest chartist in the world to appreciate, the stock had a big run, stopped at supply, and confirmed supply, right? Went from 260 all the way to 284. You guys are trading these things. God bless. And did I trade this thing? No, but Again, you don't need me to be in the trade with you. That's the whole point of the most dynamic part of social media information. If you have a good setup, what's the difference if I'm in the trade with you? It's either going to go or it's not going to go. That's what's great about organic order flow. And until aspiring traders understand that, okay, you don't need 10 people to hold your hand in the trade. If it confirms, whether it's a $2 stock or it's $2,000 stock, it's either going to go or it's not. The only problem with these $2 stocks is you have 1,000 people from 1,000 different alert services trading the same 1,000 entries and start scalping these things for 15, 20 cents or for 5 cents even. So again, that's the only drawback. And this is why years ago I stopped trading these small cap stocks. I used to trade them all the time and I lost my edge. Once you had 1,000 small cap alert services artificially inseminating prices, you don't know if there's real buying. That's the biggest drawback I've always found in these small cap stocks. But again, a chart is a chart is a chart. So going into this week, again, you have a big sweet spot into beta earnings seasons all over the place. You have Amazons and Googles and Facebooks and Twitters, everything in between. Structurally, right now, you have to like the NASDAQ 100, although, and I'll show you guys in a second, they're pretty much line in the sand charts that are coming up for, especially for Monday. But for now, for Sunday morning, right now, they're, again, every single time it hits the 10-day moving average, it bounces. Again, the whole birth of the trade. So if it holds, it's obviously bullish. Last 3 sessions, you had lower closes than opens, hence the red bars, right? Hence the red candles. And we closed right below, right on the 10-day moving average, again, the birth of the trade. So Monday, I think it could be a do. I don't want to figure it out. I don't want to use the word do or die. I mean, technically, if we close below the 10-day moving average, yeah, absolutely. Any close below 178.70 is a sell signal. Is it bearish? No, but it's a back testing sell signal. So Monday's session will be kind of important, especially for the NASDAQ 100. And if you look at these individual charts, you can see how everything is on the bottom of the channel. Like look at Netflix, look at Tesla on the bottom of its channel, Netflix on the bottom of the channel, Amazon gapped up 15, right? But look how close it is to the bottom of the channel, right? And if it starts confirming the bottom of the channel, it's going to go lower. I mean, look at Alibaba, the same thing. Look at NVIDIA, right? The same thing. So, Monday, for all you guys who are in the live webinar, please get there a couple of minutes after 9 o'clock Eastern time. Depending on how the futures open up, we will have a very, very specific game plan for all these beta names. But for now, just from the macro point of view, they better hold. They absolutely better hold. You're going to start having, they better hold the 10-day moving average, because if these things fail to rally on the first spike of the futures, you're going to see some confirmations to the downside. So I'm giving the bulls the benefit of the doubt going into Monday. But again, as you can see from the naked eye, and again, sometimes, especially for new traders, they try to overthink. Sometimes you can just see the bottom channels. These are all 60-minute charts. You can see how tight they are, how many of these bear flags you're sitting on the bottom channel. So they have to hold them. So, let's for now call it bullishness with a red flag imminent, right? Let's just call that. And depending how the futures open up, we will definitely watch them to the downside if they confirm the 10 o'clock channel. So for now, let me give you guys some ideas for Monday's session. Amazon, I believe they report either Wednesday or Thursday. You can see the daily chart. Again, you can see the daily chart. And again, if you believe it, again, I'm not saying anything at the earnings. This is Amazon. Yes, the stock will be at 3,000 probably by earnings. I don't know. I don't have a crystal ball. I love the company. This is the juggernaut of the universe. Nobody's making a macro statement about Amazon. We're talking about from a short-term trading standpoint. Again, closed 2 days below the 5-day sell signal. Lost the whole gap up on Friday, sell signal. If it confirms right over here, if it confirms this 1810 level, and you can see it on the 60-minute channel as well, if it confirms a 1610, your first move is 1807. But if it moves that, right, if it confirms that, has a chance to get to 1798. Again, this is only for a day trade. I know it's the greatest thing ever. I know Wednesday I quoted for a $6 candle in 3 minutes, and then I watched it open another 15. I know it's a great stock. It's a great company. This is strictly for a trade. So keep an eye on that. Tesla, it failed. It failed. I wanted that 326 so bad, right? I wanted that 326 so bad, because it would have absolutely exploded. I traded numerous times on this past week, both sides. I'm watching this like 311 311, maybe even this 310 build, because if it starts building 310, then it starts, it has a legitimate shot to 306. So, I'm watching it to the downside. There's no reason for me to watch it to the upside unless there's some good news and gap and go above 326. So you have to be biased on Tesla to the downside, at least going into the week. Netflix, still has more room down. I mean, there's no reason not to believe so. The after hours low, I believe, on Netflix was 344. We're at 360. And we still have a 16 point downside bias all the way up, all the way down to the rising 342 support. So yeah, the trend continues to be lower, right? So, we're going to watch it. We're going to watch this thing. We're going to watch it depending how it opens up. Yeah, 360. If this thing gaps up and takes below 360, yeah, it's going to go lower. But again, it all depends on the future. But for now, obviously, the bias to the downside. Alibaba as well. I have to check their earnings. You can see Alibaba as well, right? It's just kind of just hanging out here and hanging out at support. If it starts losing this support, again, go see Amazon, go see Tesla, for references. So they look this, banks are trying to wake up. We had JP Morgan and Citibank in the middle of the week that had actually good moves. JP Morgan had that move from 311 to 312-ish intraday. They're trying to wake up. I mean, these have been the dogs of all dogs, but they're trying to wake up. You can see here, Bank of America, if it starts putting in a strong base above $30.30, you could go. I mean, these banks just have not rallied. And again, you can see Citibank as well. Again, needs a little bit more room to get out there. Goldman Sachs as well. But Bank of America is looking pretty clean. If it could just close over the 50-day moving average, you have upsides. Keep an eye on that. AMBO, recent IPO for all you guys who are trading these small cap stocks. Keep an eye on it. $8. Is it my thing? Probably not. But for all you guys who are trading these things, it gets above 8. It could go. I like this AMPE for more upside for you guys who are interested in this thing. Keep an eye on it. If this thing starts reclaiming 280, you could get a move to 310. I have a couple of other small cap stocks for you guys to watch. I'm not going to put this for everybody. I just don't want an artificial insemination coming in for order flow for you guys to enter these trades. So you guys will see that along with the option flow report in the email for the rest of them. Other than that, guys, again, pretty solid week. Again, it's all about education strategy. It doesn't make a difference who's saying what, how many followers, the whole social media nonsense, until you start embracing the actual organic flow of trading instead of the social media bullshit. Excuse my French, but that's what it is. You're going to continuously spin on that carousel, that proverbial carousel that unfortunately a lot of traders, they get so dizzy and they're gone before they could reach their potential. Again, the name of the game is to tap your potential. And if you're not trading, and again, it doesn't have to be the PS60 theory, it could be anything, okay? If you're not trading and putting yourself in a position long-term to win, you're not trading, okay, guys? So God bless everybody. Love someone, smile, put a smile on somebody's face. Just be a good person. Control what you can. Don't worry about anything else. All right, guys, for all you guys who are joining us tomorrow in the live webinar, Morning Strategy starts up at 9 o'clock Eastern Time. For the rest of you guys, have an awesome, awesome trading week. Wish you lots of luck, health, wealth, and happiness. And see you guys next Sunday. Have a great weekend, everybody. Enjoy your week.